the thing that I like best about about ETF.com and the company that I had, and I hope the company that we build here, is that we had an amazing culture with great people doing things for the right reasons. So it was like the world is such a messed up place and there's so horrible things going on all over the place, but not here. Here things make sense. We do things the right way. You get rewarded for doing well. We treat people with respect. We deliver value, like those things. We can have that, right? We can have our own world. And I love that, right? Like that is probably my favorite part about being an operator. And I love to see that in operators, really making the culture that you want to live and then really living it is just an amazing thing.
Thank you for tuning in to another episode of Trends with Benefits. I am Ed Lopez, and my guest today, Jim Wiandt. He's industry partner at Stack, but more than that, he's a pioneer in the ETF space and investor education, founding ETF.com and Inside ETFs. And I'll probably skip over a bunch of stuff, but sold that, started getting into venture cap and the fintech space. And, so he's been in the middle of one of the hottest investment trends in the last couple decades, ETFs, and has seen how they have evolved over the years, as well as how investor preferences have evolved and how the market is involved. And so I thought, given his current projects and involvement, particularly in the venture cap space and fintech, he would be a great guest to offer some perspectives on the state of play. So Jim, thanks and welcome to the show.
Thanks, Ed. Great to see you.
Maybe I'll just quickly start on the ETF side. We could talk a little bit more later about the early days there, but thinking about ETFs, you've been involved with the space since the early days, and it's now become mainstream and people love ETFs. What do you think it takes to cross that chasm from niche product to mainstream? Investor education? Is it something else? Is it performance?
I think in the case of ETFs, the market certainly had something to do with it, right? Like when you had sort of the internet tech boom, 1999, there was something in the wider zeitgeist that ETFs kind of caught on to and took off. And so there's something there. I mean, education, I think, was massive with ETFs. I think there were huge misunderstandings about what the products are and confusing ETFs with other things and confusing different kinds of exchange traded products. And I think that has really straightened out over time. And you took, a vehicle that really was kind of pioneer and cowboy in those early days with like huge trading spreads, by the way, and you made it like a tremendously institutionalized, at scale for retail investors, low cost, hyper efficient vehicle that's totally changed the investment management business. So I think it was a gradual, right? Like there were bursts of activities that really got the industry going. And in those early days, also as an observer to the industry, I could tell when products were going to be successful, right?
Yeah.
Like the first the first international ETFs, well, those were going to work. The first fixed income ETFs, those were going to work. The first commodities or gold. And I think that's much tougher now.
Yeah.
There's so many ETFs covering all sorts of terrain that I didn't even imagine in those days. And it's much tougher to kind of explain, and ETFs have to be increasingly sold, right? Like strategic ETFs. Occasionally there's, differences where it's an obvious story 2 times or 3 times or 4 times S&P.
Or some thematic comes out. Yeah.
Yeah. Or some thematic, but like anything that's strategy focused really has to be, sold. And that's completely different. So there's no like Field of Dreams ETFs anymore.
Yeah. I miss those days.
Yeah. Yeah.
Just means I have to be more creative and deliberate about what we do. Yeah. And then now with a lot of the traditional mutual fund shops coming in, and you're right. It's relationships, I think, and having to just communicate what that strategy is behind the ETF and selling it more on the basis of that strategy rather than just, "Hey, I've got an ETF."
Yeah.
Are there innovations today that feel like ETFs did back in 2000 that you're looking forward to?
There is absolutely no question that asset management will look completely different in 10 or 15 years from now. And it's going to be more direct, customized, and downstream distribution and analytics and products. And it's just a matter of what that looks like and how that path happens. But that's to me the next big thing. I mean, you can certainly make the case for blockchain and tokenization as well. But I see the sort of, and it is kind of AI driven customization and kind of direct solutions as being the next big wave.
What's driving that, do you think? Outside of tech, I mean, is there a particular demand for that hyper customization? Is there something about the demography of the market that perhaps is leading to the need to explore certain technologies to provide that level of service, if you will?
I mean, honestly, it's just better service, better outcomes, right? Like, so outcomes that are mapped to your total financial health as opposed to just your fund investment. I think there's a huge delta between the way that people consume investment products now and how they could slot into their total financial picture. And I think that delta is where these technologically driven solutions are going to slot in. And it's just going to be better, right? Like better user experience, better outcome. The way that, for example, your Google search now is literally 10 times better overnight, right? It gives you that little paragraph now. And then in that paragraph, it's like hammer on the nail. It's unbelievable, right? That's what it's going to feel like with investment in your interaction with investment, I think, which is going to be much more open. So, you're interested in looking at this. Well, there it is. And there are the charts like immediately. So I just think it's, it's an enormous opportunity and there's a huge amount of value to be delivered there.
Like, so what are the potential use cases then for, say, tech or AI? I know you're a big believer in AI and how that comes to bear. Are there certain platforms or certain apps or functions that investors will be using in the next 3 to 5 years?
I try not to get too fixated on like AI or not AI because like to me, like that's kind of the back end. And it's really like, okay, what's the solution?
Mhm.
And what's kind of the framing of the solution? Because like AI is stupid, but like it is stupid, but like it can do a lot of things very quickly and process tons of data and aggregate it in the way that you say extremely well, right? Like, but so I think of it more as, what's the framework of that interface with the client, right? Like, is it something that's spoon fed or is it something that's more interactive? And those are the things I think that we're really actively looking at. What does that solution look like? Where is it in the ecosystem? Is this something that's focused on advisors, or is this something that's focused on individual retail people? Is this something that comes from fund managers, or is it something that comes from Google? Right? Like, I mean, the first thing is to like imagine what's possible and then think about what's the what's the infrastructure and the framework that you need to build to serve that up. What I'm doing now is sort of like the most fun I've ever had because we can kind of work on writing the future for what investment management looks like
Hmm.
and really setting up what something that I think is even more transformational than what ETFs were. but that are like another step in that path of more efficiency, better outcome for investors, which to me is always going to be the metric, like delivering value and doing it in a way that's crisp and clear, right? Like that's always, I think, what you're going to shoot for in how consumers are implementing solutions and improving their outcomes.
So do you guys start with like a whiteboard and just kind of like, this is, if I were able to start the whole investment ecosystem today, this is how I think it should operate and work. And let's go find target companies or solutions for these things.
Yeah, it's a great question. I mean, it's a little bit of looking at everything that's out there and understanding everything that's going on now, but then also, engaging directly with customers, engaging directly with family offices, with financial advisors, with individuals, and understanding how they're consuming different products and what their pain points and problems are. The way that we think about things is a little different than most venture capital, like in a couple of ways. One thing is we really, really understand asset management and wealth management. We know every basis point in the ecosystem. And we also know who likes who and who doesn't, who has problems in their cap tables. We know all that stuff. And so, like, we've got deep knowledge of the space. We're able to sort of map out opportunities and TAMs almost in a void, right? And say, well, there's a space for a solution here. There's a space for a solution there. And we've qualified it, right? Talking to asset managers, talking to financial advisors and end consumers. We know that there's a space that's this big. And then it's a matter of funding companies or seeding companies and kind of bending them to that opportunity and connecting them to our partners. I feel almost now like I was an observer to the ecosystem at ETF.com. Now I'm a facilitator to the ecosystem, right? I've got 20 or 30 companies that can improve that whole asset management and wealth management ecosystem. And it's really fun and exciting and cool.
Do the companies you tend to work with or the problems you seek to solve in between the asset management company and the end client, or service provider in the asset management company, or the operations of the asset management company?
We live in the areas that are kind of less sexy and interesting, maybe, but kind of plumbing issues and really understanding, okay, what are the rails that are going to need to be built to make this work? And then where are the pain points that no one else can see and focusing on those. A good parallel to me is like electric cars, right? Like we're not necessarily investing in Tesla, but like charging stations and like the marks on the road or whatever whatever the different infrastructure, batteries,
Yeah.
mining around, but like those sort of things that are critical to driving the whole business, but aren't necessarily like the shiny objects in front, but are like the rails that need to service those shiny objects, right? Because I think a lot of times those, the things that are really shiny can be priced at crazy valuations that are
Hmm.
priced to perfection that are really hard to meet. And we can see where, wow, there's a company here that could be like a 500 million or a 1 billion or a $5 billion company and doesn't need to, and just needs to execute on what's right in front of it, as opposed to needs everything to go right and execute to perfection, if that makes sense.
Yeah, like, can you give an example of either a company, or if you can't name names, what the problem is they're trying to solve?
I'm not quite Dave Nottig, but I can definitely name names. I mean, like Robinhood is a great company and a transformative company, but like the valuations that they've raised capital on are really, I think it's really tough to see like a big return on valuations that are so outsized. I mean, I think there are a lot of other examples out there. So is the market like going increasingly retail? And did Robinhood hit on like a thing that's like right down the middle? Absolutely. But is Robinhood necessarily the right company to invest in to capitalize on that? That I think that's an open question.
How about projects that your portfolio companies might be working on behind the scenes? Can you give an example of what gap in operations or what gap in advisor-client relationship that you guys are trying to solve? Can you give an example of something like that?
I mean, a great example would just be, I have a financial advisor where my money sits. He's great. The reporting is comically bad. Like, I mean, it's shocking. Like just looking at my portfolio, like there's no granular analytics going on. It's a deeply unsatisfying experience, right? Where I can't ask it questions, I can't explore, and so that area of communication between the advisor and the customer, I think is a huge one, right? Of being able to take things that happen in the day-to-day news, understanding what's in the portfolio, and providing communication to the advisor, to the client based on that. I mean, that's just a giant opportunity that I don't think anyone's tackled yet. Definitely people are working on it, and definitely it will get tackled, but that's an obvious one where, like, okay, you know that your client is concerned about carbon emissions and global warming, and you know exactly what their portfolio holds. And then whatever happens in the news, like there's an oil spill or something like that, this is how this affects your portfolio. This is what your portfolio is aimed at in terms of impact, right? And kind of providing real-time feedback based on what's happening in the portfolio. Kind of talking clients down from panic when the market is going down, to have communication do that proactively in a way that doesn't even necessarily necessitate a phone call, but it's just like, you're good. Like, in 100 scenarios in the past that have looked like this, here's the range of what's happened with your portfolio, right? Like that kind of hand holding that's sort of technologically driven. I think that's all just there for the taking.
Absolutely. That would be awesome. I think it'd be awesome for retail investors if they could just have an app or something that does that. Like, I have accounts at different firms and I've created this massive spreadsheet to track stuff, but I wish I had the skills to do the programming to, drill in and download feeds of prices and all this stuff. And I know there's these software programs that aggregate different services or can tap into your bank or whatever, but they always download it in a weird way, and it's always more work trying to set it the way I want it. I don't know. Maybe you know of a better app to use, but I feel like that would be really helpful for people too.
A lot of the technology is there or is like coming together, but like the real solutions haven't come together yet, right? Like, so the ability to like take all your different accounts and put them in one place is pretty easy now, right? Through Plaid and other technologies. But like the kind of aggregated analytics and sort of interacting with what's happening in the market, like it's not out there yet, and it's not a giant leap to get there, I don't think.
It shouldn't be, right? Yeah. And not for the and for the right price. All I keep thinking about is, yeah, but what about all the data providers you got to pay to be able to serve up market information and use information? But I guess those problems can be solved for a particular price.
Those problems can be solved for a particular price, right? And then there's lots of public data too, so there's levels of quality and granularity based on what data you have access to. But yeah, I mean, all those problems can be solved for a price. Look, I think most people and platforms do have access to good data. It's just not being served up and analyzed in the right way, right? Like if you've got a Schwab account, you do have access to, all kinds of data, but like how that is presented to you and what charts and how it's kind of triangulated with the news and what's going on in the market, that's another thing.
So I know like larger companies are probably looking at ways of doing this. It sounds kind of like an AI problem or an AI solution to help suss through all the data and present a commentary, if you will. I'm sure big companies are looking at doing things because Van Eck can't be the only one because we're looking at different ways of using AI to serve up ideas. Where does a startup fit in that? What is the realm, or what is the opportunity for a smaller company to do that when all the big ones are probably working at it too?
I think you can ask that same question of different technologies too, like, blockchain technology or tokenization, right? Like all the asset managers and custodians have a skunk works going on around tokenization. That's certainly true around AI as well. I mean, the answer to that is historically, large companies don't necessarily do well at cutting edge technologies, right? They don't. And a lot of that because they're so constrained and there's built-in interests and there's existing infrastructure and there's all these things that block sort of the speed of the technology, whereas startup companies kind of have a blank slate and are working with a completely fresh mindset and no legacy technology, and they can build it from scratch. And so, I mean, those companies get bought all the
Yeah.
time by the big companies, right? Like left and right, one after another. And occasionally one of those companies becomes a big company itself, but more often than not, they end up getting appropriated. And the reason for that is because they're better at it in general at building transformative technologies. And it's why I love the venture ecosystem because it's like anything goes. There's no limits. Like it's blue sky. Okay, so we're looking at like a blank slate. What's the ideal solution that we would build? Well, then let's go build it. And small companies can really do that without any constraints. I think that's the answer.
Cool. That makes total sense. You mentioned something, tokenization. I know it's not your realm per se, but do you foresee, kind of just at a high level, the potential of tokenized assets or tokenized securities, investing via tokenized funds, if you will?
I definitely do, right? And just the fact that a lot of my favorite very smart people are working on it tells me that there's something there that's not just a pipe dream. I think it's a really hard thing, right? Like it because it's just a totally different infrastructure, like like the pricing, the regulation, like there's just like a lot of really complicated issues. But man, am I a buyer in blockchain technology? Absolutely. And like not in the way that it's so funny, Ed, like you like Matt Hogan, Jan Van Eck, like how like Dave Abner, Dave Laval, like all these guys who are like foundational people in the ETF industry. And then, by the way, there's many more names have really gone full on toward blockchain and people ask me like, why is that? Why would ETF people go to this like casino gambling space? And you're fundamentally you don't understand what the technology is all about if that's what you're asking, because what blockchain is to me is an efficiency play, the same way ETFs were, right? Like it's about secure, real time, lower cost transactions. That's really what it's about. And that's what makes it really exciting. And I think that's why so many ETF people went over into that space, right? And I think people who were attracted to the ETF space, a lot of us, are always looking for what's next and like raising the bar. And so it's a natural to me that you would go to where the cutting edge technology and the better solution and better efficiency is.
Yeah, absolutely. I'm really hopeful on the technology, particularly to bring to market and make it more efficient to buy real assets, whether it's land or I don't know, gold, whatever it is, just more physical assets perhaps that can be traded. I feel like real estate
Mhm.
is due a disruption.
Real estate is insanely archaic, right? Like is absolutely due a disruption. I mean, asset management in general, right? Like I think The nature of the beast is that because we're so regulated, and by the way, we should be, it's just makes change much more difficult, and it makes fast technological adoption more challenging, but then it also makes those opportunities even greater.
Yeah, definitely. Private investments have been one of the hotter trends of late. Do you see a potential for disruption in the private markets via technology?
Absolutely. I mean, first of all, there's just private markets and like the fact that they've become larger and larger, and more companies are staying private for longer. Really targeted thematic exposure can be tough even to get in public markets and is easier to get in private markets sometimes. There's that trend, and the fact that because of that, more people further downstream want access to private markets. So, like, that's a big trend. Like, that's one of our big, and we live squarely in the middle of it because we are private markets,
Right.
right? So, we're a big believer in companies like iCapital to kind of facilitate the rails to make that happen. There are really challenging issues there. You still have your qualified investor issues and your tax complexity and all that stuff. So like there are really big challenging problems there to be solved. And you can have that debate over whether markets going fully private is healthy or not. But the fact is that they are, and that a lot of investors are being left out of exposures that large institutional investors are benefiting from,
Right.
right? And in terms of returns and in terms of exposures, so there is absolutely a big opportunity to democratize that space. And should it be regulated and should we be thoughtful about how that's done? Absolutely, we should be. But like, I think there's a massive opportunity there, and we're a buyer of that.
On the flip side, do you think there's something that will change the landscape for companies going public, for more IPOs, something that would make it more attractive for companies to go public sooner?
I'm not necessarily the right person to answer that. I can tell you that I would love to see healthier public markets than we have right now. I would love to see more IPO activity than we see right now. I would love to see, in general, greater transparency around company activities, right? And investors that have a greater view on what they're investing in. And so, whether that's better regulating private markets or facilitating public markets, I'm a huge supporter in that. And I think we're taking steps backwards potentially by going more private and having more obfuscated markets, less open markets. I am a big believer in transparency. I think part of the answer to that is probably regulation. And you
Mm,
could certainly make a case that public companies are overregulated, right? Like when it's so much easier and so much more advantageous to be a private market company, we may want to take a look at how we're regulating companies to ameliorate that. So there could be a regulatory aspect of that that's big as well.
right. Interesting. Let me take you back to your ETF days a little bit. And because I'm still highly involved in the ETF space myself, you've seen ETFs evolve dramatically over the years. Going forward, do you see a next frontier for ETFs, something that hasn't been tackled yet in the space?
If you had told me that we would be knee deep in leverage right now, like that is a total surprise to me. Like seeing Bitcoin out there, not a surprise. And I thought that was coming and that ultimately we would get to the right product structure, which we did. All of these sort of defined outcome focused ETFs, like those are a big thing right now in the structured product space. That's one that certainly is ripe for disruption, and more efficient vehicles and lower costs and things like that. So, like, I think that's a good development. I don't know. I'm pretty sure there is something else out there. I'm pretty sure you're looking for it yourself, and as well. I've been surprised, right? That like I thought the days of like $1 billion out the gate ETFs were over, and
Yeah.
we've had some of those again, but again, like there's thousands of ETFs covering virtually every imaginable thematic that you could cover in every market and every market cap across the world. So I think the bulk of the growth is going to continue to be right down the middle in like clear exposures at low cost, right? Like the
Yeah.
assets, the bulk of them continue to flow there. But I think there's always going to be opportunities on the margins for interesting thematics and strategics.
Yeah, you've been a big proponent of low cost, transparent investment strategies, just kind of basic core holdings, right? And then some of the other stuff, like you said, is just kind of on the margins.
All my families and friends who know I'm a finance guy and they ask me, and I just say, be as broadly diversified as you can at as low a cost as possible and let it sit. And you're going to beat 90% of other people.
Yeah. Yeah.
That's great advice for most people.
I think you're right. Tell me about Stack Ventures. How did you get involved and what compelled you to team up?
Stack comes from a relationship that I had for many years with Pete Casella. So Pete was at FTV Capital back in the days and worked with Ben Sukier. And FTV was an investor in all the successful early independent ETFs companies like Power Shares and ETF Securities and Velocity Shares and Index IQ. And so I knew him from those days. And then Pete went to Credit Suisse and he invested in ETF.com. And then we ultimately sold in 2015 and 16. Pete went on to run venture capital at JP Morgan and then started venture capital at Point 72 and was for there for 7 or 8 years. And I knew him really well there and I would help on, different companies that he was working with. And when he left Point 72, he approached me about working with him. And he had this vision of really deep experts in very defined spaces to build venture funds. And that's where I sat basically. Relationship wise, I know everyone in the asset management and ETF business. And I know all those businesses fundamentally. And on my team is Adam Sussman, who I've also known for like 20 years. Last job was the head of strategy at the NYSE. And, I knew him in the days he worked at Tab Group. He was at Daytech before that. Like we're old timers. And we're building funds that are just based on deep levels of expertise and connectivity, right? So we're going in and kind of mapping out the space and saying, look, there's a space for a company here and a company here and a company here and a company here. And then we're finding those companies or we're building those companies. And then we're connecting them with strategic investors in our fund to have their problems solved for them, right? So we're talking with big partners in the asset management and wealth management industry about what are the big opportunities, what are the problems, what are the bottlenecks, how can we solve them? And then we're building companies to solve them. That's essentially what we're doing. And so it's a high growth business that's based on deep expertise of the space.
Is there a characteristic or signal that you look for in a team or a founding team in a company?
It's a little bit of it when you see it.
Hmm.
Like I feel like I can spot an operator when I see one. But that said, you need to really have an opportunity that you've got your hands around and the potential relationships that you can connect into to build. But like in terms of the kind of team and the skill set, like I mean, look, you can see it in how they're running their company. You can see it in personalities to me. So like it's to me, I think part of my role is it's an eye thing of knowing who the real people are, who the real builders are. For an entrepreneurial company, it's a different skill set than for a really large company where you're kind of navigating politics and marshaling infrastructure. For
Hmm.
an entrepreneurial company, you're building from scratch and you got to bleed and scratch and claw and really work. And so you got to see that, I think, in people, that level of grit and that level of desire and that level of passion, because that's what you need as an operator and as an entrepreneur. You're not, it just does not happen in a vacuum. You can have all the connectivity and all the like credentials in the world, and you won't be able to build if you don't have, that real grit.
This is a random question. You reminded me of an article I read a few months ago in the journal. What makes a more successful founder and by age, younger founders or older, more seasoned, perhaps more experienced founders?
Totally depends. I will say, with younger founders, you can have like this fresh perspective on the world that can be incredibly valuable, where you're completely unbiased and you're looking at things with fresh eyes. But man, there is huge value in wisdom and experience and like this too shall pass mentality.
Hmm.
There's real value in knowing what you're good at and knowing what you're not and not caring about stuff that doesn't matter, right? Like the thing that matters is building the thing and you give everything to do that. And sometimes young founders have too much ego that they're not giving to the thing and not seeing their own weaknesses and how those get filled in. So, like, I think there's an overlay of wisdom to that kind of youthful exuberance that can be super valuable. I think of us that way. I think we can give some of that as an investor, but I think you want a little bit of that on the team as well. But man, you definitely want fresh eyes. You definitely want energy and drive. And I think it's a mix of both is like the perfect combo. And it's rare that you see that. It's rare that you see both.
Yeah,
Usually
yeah.
you see people who are like all guns a blazing, but that have no idea what they're doing and just, you know, or you see people who are totally jaded and like seeing the obstacle more than they're seeing the possibilities.
What would you have done if ETFs hadn't taken off? What would you be doing today?
No telling, right? Like I could have been doing like any number of things. I think something. I think something that certainly involved building a company with a culture. I would say that to me would be the foundational thing. Is I definitely feel like at my core that I'm a builder and an operator and a culture builder. And the thing that I like best about about ETF.com and the company that I had, and I hope the company that we build here is that we had an amazing culture with great people doing things for the right reasons. So it was like the world is such a messed up place and there's so horrible things going on all over the place, but not here. Here things make sense. We do things the right way. You get rewarded for doing well. We treat people with respect. We deliver value, like those things. We can have that, right? We can have our own world. And I love that, right? Like that is probably my favorite part about being an operator. And I love to see that in operators, really making the culture that you want to live and then really living it is just an amazing thing.
Yeah, that's gotta be I mean, that's great to be able to influence the culture in that way. I try to do it with our team internally, just within the company, but yeah, I think I can relate or at least understand the joy you get out of building a new company and a shop and yeah, so
100%. I mean, Van Eck has a great culture, right? Like you have a great culture and high quality people across the board. And that's what good business is based on.
well, thank you. Yeah, as we close up in a couple ways. I'm gonna ask you about one long-term trend you see playing out over the next several years, and then we'll go into our speed round, trend or fad. But it just I don't know, is there a trend that you are particularly excited about? It can be about what we were just talking about, or it can be totally something different. But over the next few years, is there something that you see playing out?
The big one is this trend toward downstream customization, increasingly individualized, retailized solutions that are more holistic than what we have now. That is the big one to me. And like, that could just, it could look a million different ways, right? So visualizing what that looks like is key. But I think that's the top of the chain. We've talked about some of the other ones, but like, to me, that's the big one.
Do you think there's a risk in hyper customization of reinforcing, say, short-term biases that individuals might have?
Absolutely. Right. So like, this is an AI philosophical question that you just posed, Ed, because it's like the internet now. Like the way that social media is served up, and that you're fed content that reinforces sort of lowest common denominator, and like goes into what people desire, is a risk. Like, I think the salvation is that numbers are numbers, and like, you can look and run scenarios and come out with something that is demonstrably going to just have a better outcome and performance than like all these other ones. Like, I mean, I hate to say it, but I have more belief in technology than I do individuals' guts in terms of like putting together a portfolio. It's like AI, and I think it's why Elon Musk gets so frustrated with like regulation. So like, electric vehicles are regulated. So like, if you have one crash in every million, like, you're basically going to be regulated out of existence. It's completely irrational, right? The metric is how many crashes are going on now. And it's way, 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 way less with
Hmm.
electric vehicles already now, right? Should you make that as low as possible? Yeah, but like, your goal has to be a better overall outcome and fewer deaths, right? Like, it's the same thing, right? Like, so is there going to be rational regulation of how AI is used and solutions are delivered? I don't know, right? Like, not necessarily. So that's a question. But am I a believer in technology and being able to serve you up better solutions? Yeah, I definitely am.
Cool. And this is a good segue to our trend or fad round. I'll mention a few different concepts and you can just answer trend or fad, or if you want to explain it, feel free. Well, actually, since you mentioned electric vehicles, Waymos or self-driving, autonomous vehicles, trend or fad.
And
Yeah.
no, I think that like, there'll come a day in the not too distant future where we're not driving cars at all.
Yeah, I can't wait for that. Well, I do like driving, but most times. uh, Decentralized autonomous funds, trend or fad.
I'm gonna say bad on that one, but I could be convinced.
Maybe. Okay. Private equity secondaries.
I think it's fad.
Hmm.
I think it's fad. I think something will straighten that out. Like, you're going to see more public companies, and that being less of a thing, or better regulation of privates. Like, something's going to solve that access issue, I think.
Yeah. Yeah. I mean, what's the issue right now is basically companies are staying private so long, but private investors want some kind of exit at some point. So now there's more of a market for helping people get out of certain funds and certain opportunities.
I think it's market, right? Like, lots of people want access to these like really cool names, and they can't access them. And so, is there like a massive pent up demand for SpaceX and all these other public companies? There absolutely is. Like, it's undeniable. I just think that that's going to be solved eventually through the market.
About fractional ownership of everything, trend or fad.
Oh, I think that's a trend. I think that's a trend. And on your tokenization project, like, that would be at the front lines of making that easier and easier.
Red light therapy, trend or fad.
My wife is a gigantic proponent.
Really? Okay.
She is. I'm gonna say she's gonna hate me if she'll never listen to this because she does not do ETF stuff. But I'm gonna say fad.
Yeah, 6 months from now, it's just gonna stay in the drawer or whatever.
Snowing some other.
And then last one, I don't know if you've heard of this term. I find it a funny term, California sober. Do you know what that is?
I think I do. Give me the 10 seconds.
My understanding is you don't drink alcohol, but you eat gummies all day.
God. But I hope it's a fad because I don't want just like a stoned out world. So,
Yeah.
but it seems to be a trend currently. That's for sure. People are drinking a lot less.
That's true, right?
That I love actually. The fact that people are drinking a lot less, I really like that. And like there's a trend toward, more health focus. I think that's good in general. So gummies are not that necessarily.
Right. Right. Well, awesome. Jim, thanks so much for your time and your perspective. What's the best way for people to learn more about what you are doing or connect with you?
Yeah, I mean, easy to find. Stack.vc is the website, and Jim at stack.vc is how you can get me. And, drop me a note anytime.
Awesome. Thank you.
Thanks, Ed. It's great.
And thank you for tuning in to another episode of Trends with Benefits.